for years have been told like you are the best, you're doing well, like everybody's looking at you. You get that the adulation, not even in a negative way, just that validation that people want from their career. And then it's like now what? It's like now what? It's like now what?
Hey there, Jeff Barnes here again with Angel Investors Network, and this is the Angels, Exits, and Acquisitions podcast. Now, we just got done filming an episode with Jonathan Mason of Gentry Search Fund, and I got to tell you, this has been one of my favorite episodes in a long time because he brings up something that is right on target with what we are doing here at Angel Investors Network. He talks about how you can go through this ETA process, and ETA, I'm not going to tell you what it is. You got to listen to the episode. But it's absolutely phenomenal. It's a great way to take advantage of the trillions of dollars that are out there, not only in investment capital, but businesses and growing and scaling businesses and making a lot of money doing that. And of course, talking about pro athletes and what his career was like as a Harvard football player and going through Harvard and working it in Wall Street and things like that. Just an incredible episode. Really hope you can tune in for the entire thing. We went a little bit longer than normal just because it was such a great conversation. And I can't wait to hear what your thoughts are. So as always, like, subscribe, and share, and looking forward to hearing about your feedback on this one. Take care.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Hey, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. I'm here today with Jonathan Mason. Jonathan, how are you?
I'm doing very well. Excited to be here, sir. Thanks for having me.
Absolutely, man. Absolutely looking forward to it. So, Jonathan, you run a company called Gentry, and there's a lot of history I know behind that you guys, obviously didn't just wake up and decide to start this company. So why don't you give everybody a little bit of background about you and how you ended up where you are today?
Perfect. Thanks, Chef. I didn't just wake up one day and decide to start buying small businesses. My love for small businesses actually started when I was a youngster, around like 7 or 10. So I was blessed enough. My father was an entrepreneur, ran an engineering firm in Maryland. So that was like my first job, and I loved it. I got to see my dad as a boss. I didn't quite know what that meant and what it all entailed at the time, but I was proud. He was creating jobs for his employees, and I saw as friends, like as my uncles. Like Mr. Robert was always was my uncle. So that was kind of my first foray into small businesses. I ended up going to play high school football at DeMatha Catholic High School, and then on February 6, 2008. I signed to actually go play football at Harvard. My entire goal was to go to Harvard, study business administration. Harvard doesn't even have a business administration major, but I wanted to go back and then run my father's company once I had a little more basis. But unfortunately, 3 days later, after that date, my father passed away unexpectedly and without a succession plan. That business actually ended up closing. So that kind of spurred me to know I wanted to get back into small business. So I went on to Harvard, played football, had a great 3-year starter career, and then went on to JP Morgan. That's where I first kind of learned about mergers and acquisitions. I was based on the mergers, acquisitions, and risk arbitrage trading desk. So trading around different opportunities there. I spun out later and raised a hedge fund. Ran that for about 6 years. But during that time, I made little small investments on the small business side. So teamed up with one of my friends who was playing professionally for the Philadelphia Eagles at the time. We started a small clothing store. So I was helping out with the clothing store and running a hedge fund and noticing that I was making all my money on one side of the coin, but my interest was on the other side. I was working, tackling what I saw as like real issues, was working with people from differentiated backgrounds. And I knew that's what I wanted to do. So went back to Harvard Business School just to really learn what that was. And right before that, I learned what a search fund was and entrepreneurship through acquisition. So I was able to learn from some of the best Jason Pananos, actually a national company, kind of took me under his wing. Later, I had some advisors from Search Fund Accelerator and Peterson Partners that really gave me the game. And I was able to pair my network of working with professional athletes to actually train them to go back and buy small businesses in their hometown. And this didn't come in a bubble, like you said. This came from a place of understanding that over the next 10 years, 7.8 million businesses are set to close without a succession plan, similar to my father's. And I want no family to go through that same, at least financial pain that I went through. So that's where Gentry Search was born. We've since not pivoted, but expanded scope. So it's not just professional athletes, it's high performing professionals. So think anybody like yourself, obviously, tech workers, consultants. I've worked with different type of professionals that want to actually buy and transition a small business. So that's Gentry in a nutshell, or the origin story of Gentry, at least.
That's awesome, man. Well, first off, that's terrible to hear about your father. I mean, I can only imagine what you're going through, especially at such an age where you're like transitioning into adulthood and being a man. Like that's got to be rough, man. Yeah, art goes out to you because I can't even imagine what you would have gone through at that one. So, especially as a guy growing up with a father who's a business owner, and my dad was a small business owner. And when I was growing up, I don't know if you watched your dad do this, but it was like ups and downs and ups and downs. And so I actually had the exact opposite thought that you did. My thought was, no way am I doing that. Like that. I mean, it was hard on the family. He did hardwood flooring. And so he would do this really high end hardwood flooring. Well, if you're doing a high end hotel or, a restaurant or something like that, you're working all night while they're not running. Right. And so we wouldn't have my dad around at night. Then of course he's trying to sleep during the day and we just wouldn't see him a lot. So I was like, I don't want that. Right. So I ended up going to the Navy and thought, well, this will be easier, right? 3 squares and 3 hots and a cot, as they call it, right? Turns out I didn't like that at all. Fast forward a dozen years, I'm an entrepreneur and starting companies and all that. But I can, it's interesting how the decisions that we make can be really based off what we see and we witness growing up. And it takes a long time to, I think, really appreciate that until you become an adult, right?
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
110%. Like, I think it's hilarious. Well, it wasn't running the same company of your father, but that entrepreneurial spirit was in you. And that's because like it's with what you've seen and like just it becoming real. But the ebbs and flows of small business, nobody's immune to that. And my father was not as well. But and I think that was one of the reasons that I wanted to go get a little more knowledge and come back and support him. So just to kind of take some of that burden off the family. Yeah. But it's that bug's definitely in us.
Yeah, definitely, man. And going to play football for Harvard must have been a lot of fun, a lot of excitement, right? And I gotta be, when you go play football at any sport, especially D1 kind of level, Ivy League, I think is a little bit different than the rest of them because there's this, perception, right, that you're not going there to play sports. You're actually going to the Ivy League because of the education, but you're doing that and going out there and hitting the gridiron all the time. I can't imagine that was easy to get through, right? I know what it was like being in the military and having to do school and training and all that stuff while I was in the military, but get an Ivy League education while you're trying to play sports full time, that's probably a little bit challenging.
It was definitely was not easy. I think the perception, I know you seem a lot more well versed, but for a lot of people, they're like, well, it's not as hard as going to play at a different D1. Well, I totally feel there is a level to the competition for sure. But I mean, a lot of my teammates are still playing in the league right now. I went to Harvard with me. So it is a level of football that you're playing. And it's like saying you have an additional 35, 40 hour job on top of some of the hardest academics in the country. So we have, the same I had 11 knee surgeries while I was at Harvard playing football. So it's like you add up the actual practice time, the film study, the training, lifting weights, and then like things like training room, rehabbing and things like that. It's a lot of hours. So it definitely wasn't easy. Taught me time management, taught me resilience, and a lot of the things that I actually saw while I was a college football player were some of the things that I needed once I became the CEO. And that was actually the connection I met with the first population of people that Gentry was serving. It's like, okay, professional athlete, you are used to working within a structure. You're used to time management. You're used to being the voice. Like you have to, even right after a detrimental loss, you have to go and then have a microphone right in your face, and you have to then unpack it, take the blame, and then go forward. So there's a lot of tangible skills that I saw that I had from athletics. I was able to tap in with professional athletes once I started transitioning them into business owners. So there's a lot of things that correlate to entrepreneurship.
Oh, 100%. Right. And it's the grit, right? It's the mentality more than anything else. Skills can be learned, right? But that attitude, you can't really teach it. I coach Little League, and I work with these kids all the time. And it's the first time, that we just finished up our season. We lost in the playoffs. But it's the first time that some of these kids have ever really been challenged at something that they want to be great at and are emotionally invested in, right? And I watch them go through these traumas. Like my two boys, they one of them struck out with a couple guys on base. Could have been the tying run. It was really rough. And you're watching this as a dad, you're going, oh man, I feel for him because I know what that feels like. I've been there. But to watch him kind of learn and grow into that, you can't really teach that in so many ways. Like they have to go through it. You can't just sit there on the stage and talk to somebody about it. You can't read it in a book. You have to experience it. And when you start experiencing it at a really high level, like I was in the military, I was a submariner, I was running a nuclear power plant, I was a scuba diver. I was in charge of the athletic or the training. We call it the athletic petty officer, but it was like physical training. And so the goal was always, grind, push, and get your mental grit to a point where you can persevere through whatever trauma you're going through. And the athletics at the highest level is the same way, right? Like you've got to go through all that, and that builds up that resilience, in my opinion, to then lead in a company, right? And I think that's the biggest thing that a lot of people forget about is that it's not the book learning, right? Like, yeah, you went to Harvard, you probably learned a whole bunch of stuff, but let's be honest, you've probably forgotten more than you could possibly remember, right? You've learned more since getting out than you did while you were sitting in the classroom, right?
For sure.
And I think that's one of the things that people forget about is that it's the real world experiences that make us who we are and make us resilient and tough-minded to be able to, tackle these challenges as an entrepreneur.
For sure. You hit the nail on the head. And that's one of not the hurdles, but actually one of the benefits with everything I do. I'm telling everybody. And the good thing is I have somebody very reputable in the ETA space telling me, I recorded it, that most of the skill sets are commoditized. You can learn those or pay somebody to do those. It's the softer skills that you've developed that are more important. And like one of those is even just connecting with people. So it's like sometimes it's the resilience, the tenacity, the stick-to-itness, but then sometimes just the ability to talk, especially to small business owners. Like you have to be able to connect with them. And then on the professional athlete side, like how many times have I been sitting in a tense negotiation and somebody brings up, oh, well, I played football. And it's like, what? That's what you want to talk about right now? It's like, oh, yeah, I used to play for the New York Giants, too. I had a cup of coffee there. And then it like kind of brings down the de-escalate. So there's a lot of things that your experience actually brings to the table in what I do now and in so many different industries versus the actual education that, like you said, you probably forgot a ton of it since sitting in that seat.
Now, you brought up a term that we haven't had on this podcast yet, but it's something that we're really pushing hard on at Angel Investors Network. And we're actually doing an event literally less than 2 weeks in Nashville talking about this. So by the time this podcast airs, we'll probably have already had our Business Wealth Summit. But it's entrepreneurship through acquisition. So I want you to talk a little bit about that. And then we're going to go to the search funder kind of model, because I'm really curious about your take on that and how you got into that even.
For sure. So entrepreneurship through acquisition. When I talk about it in a basic sense, it's utilizing acquisitions to express your entrepreneurial passion or express the entrepreneurial opportunity that you're trying to tackle. So the typical way we kind of learn, or I kind of learned, was you come up with a good idea, you create a business plan, you get a little bit of traction, you try to figure out product market fit, you try to get your first couple customers, you do that, and then you either get a bank loan or you try to raise angel money. You kind of go that way. Then before I went to business school, I saw a Forbes article that said search funds, the old boys club you never heard of. And I said, wait, what is this? And they said it's the quickest way to getting into the CEO seat and becoming an equity partner in a company. And then I thought about it. Instead of starting that business, which you're going to spend, that's not cheap, as we know, typically.
Not easy.
Not cheap and not easy to start a business. You could actually put that as a down payment, your equity injection, and then go get a bank loan on a business that already has the customers, the reputation, the product market fit, and actually has assets in the business. So it's easier to actually get capital to acquire a business versus actually starting a business. So through entrepreneurship, through acquisition, you are actually put into the business as the CEO, you raise some capital from a bank, you put in an equity opportunity, and then you're off to the races. You are there to create that innovation, to create new ideas into an already existing business rather than having to scale it up from the bottom. So that's ETA in a nutshell for me.
And it's such a great way to go about it, right? I remember when I first started, I didn't do that. I started everything the hard way. I've got all the lumps and bruises to prove it too. And then I come across these people that are doing this on a regular basis. And I'm starting, especially through the podcast, we're talking to people and we learn more about how they're building wealth, right? And that's really what this podcast is all about. It's like, it's not about just starting a company or even being an investor. It's how do you build wealth? And why do we build wealth? This is my take on it. We build wealth so we can have freedom, right? And we can do the things we love. And the challenge with most entrepreneurs is they say, oh, well, the only way I'm ever going to be free, right? Especially when they're younger, they're going, I need to make a whole lot of money. And if they're anything like me, they look at the traditional model of go to work for 40 years, put some money away, and hopefully at the end of that time, when you're in your 60s, maybe 70s even, you'll be able to retire and then live the life you want. And it's like, man, that just sounds terrible. No one likes that idea anymore. That worked really well when you could have a single income household and you could cover all your bases and you could still take a nice vacation every year and you had a retirement and you had the nice house, everything else to take care of. We don't live in that society anymore, right? And so as a result, people are going, well, how am I going to make enough money to not only survive, but enjoy my life? And this is where entrepreneurship has just blown up the last 20 years because of that mentality, not to mention innovation, technology is so cool. But then they think, okay, well, I'm just going to have the freedom because I'm not going to have a boss anymore. And man, all of a sudden you start working for shareholders, you start working for investors, you start working for your employees actually, because now you realize I got to pay them. And it's a really hard road to hoe. And it's not fun. No one really realizes how little fun it is until they've gone through it a time or two. And then they never want to do it again. So I love the idea of entrepreneurship through acquisition. It's just such a great idea. But what would you tell you work with athletes, we're having some athletes come to our conference as well. And we talk with them pretty regularly, but they don't have the business skills, right? Mm-hmm. And they don't know what they don't know, let alone how to run a company. So how do you guide people through that process? They're like, man, this sounds like a really cool idea, but I've never been a CEO. I've never owned a business. What do I do?
For sure. So with the professional athletes that we work with, the first thing is we treat them as an apprentice, the entire process. So from understanding the type of business that actually makes sense, how we're going to structure a transaction that would actually make sense for them, they're going through that entire process with them and we're putting through so they're learning it. While we're speaking to the owners, when like I was saying, like, the owners are bringing up football. That's because I have the players on there with me. Yeah. So they're actually getting that process and seeing everything from the first owner call, initial due diligence, sign the LOI, final due diligence through closing and the transition. We're apprenticing them through that process. But the bigger thing is we're pairing them with an operator that's going to stay on with them. So they're learning throughout the entire process that the operator's on. So in the best case, like in a lot of the cases, we actually want to incentivize that previous owner to stay on for an extended period of time. Typically, owners are going to say, hey, I want to get out of here. I'm selling it. But we try to keep it to a minimum of 2, but preferably 3 years that they're actually staying on. And they're going to be the one that the athlete is actually apprenticing under. Like you said, I sat down in business school classroom and learned a ton. The most learning I've had is those nicks and bruises that you said, the entrepreneurship. Those are the lessons that I'd never forget and that actually stay with me. When you actually see different things that are happening in real time, and how you actually have to deal with employees who actually have families and are actually depending on you. Seeing that process in real time is how you actually learn it. So the big thing is, I truly believe everything we're doing is an apprenticeship and pairing them with people that have actually done it. So ourselves, but then also the operators replacing and the previous owners. You got to learn by doing in this business. I truly believe that.
Absolutely, man. That's awesome. So we have so many similarities in this. We're working with a veteran group to kind of do the same thing, right?
Nice.
Veterans,
okay.
Yeah. So teaching veterans how to get out of the military, because, most people don't realize this about the military, but most jobs in the military do not easily translate to civilian jobs, right? And like, especially if you're, on the front lines, you're shooting, you're going into war, you're going into battle, a lot of people, that's all they think about. They think, oh, you did that. They forget about all the logistics, all the training, all the leadership skills you had to get, all these things. Like, I ran a nuclear power plant on a submarine. There's not too many submarines running around in the civilian world. So people had a really hard time. So like, oh, cool. You can go be like a boiler inspector. That sounds fun. So you don't really get that easy transition. So, and even I had, so it was funny. One of my chiefs who was over me when I was in the military, I got out after 6 years. He stayed in for 20 something. He gets out. He ended up coming to work for me, and he's getting so mad because he's like, not because of the dynamics between the two of us. We got along really well, but he and I both could not convince the higher ups that he had more skills to offer and he should be promoted and go on to bigger and better things. Because they're like, oh, well, he's only been in the business for a year. Like, yeah, but he's got 24 years leading teams and running and managing projects and systems, like incredible stuff. And so a lot of veterans struggle with that. And I'd imagine I know I've talked to enough athletes to know that they have the same issue, right? You spend most of your life getting to be the highest level of one profession, whether it's football, basketball, baseball, soccer, doesn't really matter. You spent almost every waking hour focusing on that, thinking about it, becoming great at that. And then you leave. And if you're not like, a LeBron James, a Steph Curry, a Marshawn Lynch kind of guy that's just drawing massive appeal from everybody, you kind of flounder a little bit trying to figure out, okay, what's next, right? I have a guy coming to our event, 18 years and, in basketball. And now he got out and he's like, yeah, I had to go figure it all out all over again. So it's really great that you can take those leadership skills that people have to learn. Like you have no choice but to learn if you're going to be at that level, right? And then giving them a new purpose and then pairing it with somebody who has the expertise and experience to guide them through that. So I absolutely love what you're doing. It sounds incredible. So I'm really looking forward to learning more about you and your guys' company and seeing how we can collaborate, because we got some really cool stuff going on here.
Oh yeah, we're definitely cut from the same cloth. And yeah, that I totally see it from the veteran perspective. It's the exact same thing. You've worked to be elite, literally the top in the world at what you do, and now you have to figure out what's next. And one of the things that I hope definitely people kind of heard in what you were saying is finding that purpose. That one is so important. Like I have friends that are on the process of retire, that have retired. Finding that purpose, even more so than like money. A lot of them are set for like they're very good with their money and they're good there. But that next purpose, you just for years have been told like you are the best, you're doing well, like everybody's looking at you. You get that the adulation, not even in a negative way, just that validation that people want from their career. And then it's like, now what? Right when it's all done. So finding that next purpose. And like you start to think of like Maslow's hierarchy of needs, for a lot of people that that next level of satisfaction comes through their job. So if you don't have another job waiting for you, you have to figure that out. And entrepreneurship is a great way for athletes to find that purpose. And I definitely feel for veterans as well. So that correlation was beautiful.
It's so true too, right? And You're absolutely right. Maslow's hierarchy needs, it's right there. You're trying to get to that self-actualization. And there's another, term called situational leadership, right? So let's just say you're top of your game. You just won the Super Bowl. You come off that, whether it's an Aaron Rodgers, a Brett Favre, a Russell Wilson, whatever, doesn't really matter. The top of their game there, right? And then all of a sudden you get thrust in this world. Like you said, you have the money. And a lot of people, I think, forget about this. And we've seen it happen with celebrities, all over the world, athletes. They go in this downward spiral, and it's not because of money. A lot of people who are very narrow-minded and short-sighted, they think, oh, well, they've got everything they could possibly need. It's like, no, they've covered like maybe the bottom 2-3 rungs of that ladder, but then the thing that was giving them that drive and that motivation, that desire to wake up every morning is gone, right? And for some people, it's the loss of a loved one, right? If that happens, if you're so committed to your relationship and that happens, but athletes, military, that's why we have 22, veterans committing suicide a day. It's not because the money's not there. It's because their purpose is gone. And so this idea of being in charge, and I think this is really what it comes down to for me. I can't be an employee. I'd be the worst employee in the world because my boss always got mad at me and I got reprimanded regularly, but I got out of it because I was always smart enough to, at least provide value. But when you are trying to provide value to the world and you have this incredible run, whether it's, again, military service, being an athlete, whatever that is. And now you have to go back down and say, okay, well, I don't want to start at the bottom because I've been at the top of my game, but I really want to provide value again. And so I think that owning a business is another great way to do that, because when you are in service of other people, which is really what you should be doing when you're in business, serving others in a way that's going to benefit them through the value you provide, whether that's a product, a service, a technology, doesn't matter. You do start to find that second purpose again. And that situational leadership is, I was at the top of my game over here, doesn't mean I'm going to be an automatic best CEO ever, right? I actually dropped down several rungs on my leadership capabilities because I don't know. And so, again, just bringing in and pairing expertise with drive, motivation, somebody that wants that person, I think it's a cool idea.
Man, like that, there's so many different correlations. Like we were doing like a podcast, just bringing pros on and just having them talk about business. And one guy, Super Bowl champion, great career, but actually did start businesses like while he was in the league, and like was very, very like into it while he was even still playing, which is another story. That's how impressive that is with balancing that time. But he was saying there's also this push when you're like you are the leader, but you don't know exactly what to do and you feel like you need to be the leader. So It's not just sometimes that you're on that bottom rung. It's even you're in the right role, but you don't even know what to do and you feel like
people expect it of you, right?
Exactly.
They expect you to be the leader.
So that's part of the reason that we pair them with, operators that have been around and can guide them and support them until they get the feet under them so they can start making the decisions solely on themselves. So that really brought that up for me. We got to connect. We have to connect.
Absolutely, man. I mean, we're technically at time right now, but I'm having such a great time talking to you, and I have so many more questions. Is it okay if we keep going a little bit?
Yeah. I got some time.
All
Sorry.
Right, wonderful.
We're passionate.
So let's talk about a search fund, because I think a lot of people have never heard that term before. They've heard private equity, they've heard of hedge funds, they've heard of all these different things. Angel invested, of course, but what's a search fund and why did you guys decide to go down that road?
Yeah. So the typical search fund is either one or two people. They say they want to go out and buy a business. So this has been going on for about 30 plus years. This is not something that's new. It's starting to pick up steam right now in a lot of ways, but it's one or two people. They go out, they say they're going to buy a business. Now, when you go out and buy a business, like I said, there's a couple ways you can do it. You can actually put up the equity or that down payment that you need for the loan yourself, or you can raise outside investors. So what a search fund will raise, they'll raise for one person about $500,000, for about two people about $1 million. And then for 2 years, 24 months, they'll be actually searching for the business. Now, what does that money actually pay? Pays their salary, their insurance, the health insurance, It's a place for their admin fees. And typically that gives you enough to do about due diligence on about one proper due diligence about one a quarter. So that's what that money is actually raising to do. So after the 2 years, they find a business, or within the 2 years, actually find a business. Then those investors that they raise the capital for, they will invest to actually buy the business going forward. So whereas an individual might buy a business that's like $1 million, less than 5 million, because that's where the SBA kind of taps out.
Yeah.
They're buying typically bigger businesses. So we're talking about somewhere between 2 million in EBITDA to 10 million in EBITDA. So these are pretty large businesses. So that's not, I mean, for most people, that's not something that they could fund by themselves. So the outside investors will help them actually buy that business. And for putting in that money up front to help them search, they actually get a kicker on the back end. So say they put up $100,000, they'll get $150,000 worth of value in the actual business. Now, from the searcher standpoint, for finding you get paid a salary once you actually close the business, but you also get some equity kickers. So it's about, call it for 2 people, it's about 30% in equity. So how it kind of goes is 10% for actually finding the business, 10% for running the business through the entirety of the actual transaction or the actual life cycle until you sell the business, and then 10% for hitting certain markers. So you may have like a profit level that you need to hit, or a revenue level. Once you hit those markers, you get that additional 10%. So from the searcher standpoint, you had 2 years, your expenses are paid, you're taking a good swing at bat. People don't find businesses all the time. And once you don't find a business, it's not the end of the world. You can go out and get a good job, and you tell them I was searching. They actually like, wow, good for you. So it's not like you're back on your mom's couch after this. So it's a good opportunity. But if you find the business, you get a solid salary and you get 30% upside in an actual business. And like I said, these are $10 million transactions, $20 million transactions. So they're pretty big businesses.
So let me make sure I understand that properly. So, let's just say maybe it's one of the athletes, maybe somebody says, hey, listen, I want to be a CEO of a company. I don't know what kind of company I want to do, but I want to be able to run a company. I want to be in that company in some way. And so they partner with you or your guys' investors or whatever. You say, listen, we got the capital behind us, but we don't have the time, the expertise, or the people that are putting in the money. They don't want anything to do with it. They just want to get, be passive investors, right? So they'll put up maybe $1 million. That'll give you 2 years to go out there and find a company. And every single day, that's what you're doing. You're looking at, whether it's business brokers or, websites, or you're sending out, emails, or you're doing LinkedIn's, or whatever it takes to go find a company. And then you said they then find maybe one a quarter that doing due diligence on. And these are, like you said, $2 to $10 million EBITDA. So if we're looking at, 5x multiple, $10 million to $50 million acquisition price, give or take, some of them maybe a little bit higher or lower. And then they find a deal sometime within that 2 years. They bring it back to the investors. The investors look at it. They sit around and say, okay, yep, we want to fund it. And because it's a bigger deal, you're going after generally private money or, conventional lending, not the SBA, because SBA maxes out at 5 million, right? And so they have to go through that whole process of doing the closing as well. And then the searcher then gets a job, and that could either be as the CEO or C-suite somewhere along the line. And then they get a salary from that company plus the equity. And so let's just say we take that $10 billion company, and in 5 years, they turn it into a $20 million company, and they own 30%. And they sell it at 20 million, just to make the numbers easy. They're getting a nice little upside on top of being able to get a salary along the way. So that's the basic premise, right?
And you knocked it out of the park, Jeff. Clearly, right. You've heard of this before. That's exactly it. And that's why, a lot of these people coming out of these top business schools, a lot of great operators, people that have been operators for a long time, are seeing this as the opportunity to increase their upside. And also, have some support like that. The money you're actually getting. So you're usually getting it from people that are, may be high up in a private equity fund, but they make small investments in the searchers by themselves, or other search investor firms or just angels that invest in search. You're getting also like advice and leadership from them. So if you're good at if you're a good searcher and you're a very qualified searcher, you're going to have a lot of opportunities for money. You're going to I know somebody that was looking for a third-party logistics company, took money from a guy that was really high up at UPS. Is anybody else's money just as green? Yes, but that guy's going to give you some stuff.
Yeah, absolutely.
That is going to have a better opportunity on it. So yeah.
I'll be honest, man. If I'd have known about this when I got my MBA 13 years ago, I probably wouldn't be here today, right? Because I was the guy that's like, I want to be an entrepreneur. I got to figure this out. I'm going to go out. I did every site. My first attempt, it wasn't a business. My first attempt at a business was going out there and contracting garbage delivery companies with these big, hotels and things like that. Because you can actually do that. You can actually, convince them to switch. Man, I was terrible at it. I tried financial services. I tried all sorts of things. I was terrible at a lot of things. And what I realized along the way, and what I think anybody you talk to that knows me, they'll say the same thing, is I'm really good at being the operator, right? Like I was never going to be that big picture visionary. I got to figure out the next generation of technology innovation. And I didn't know that about myself, really. I just thought that if I was a good operator and I understood this stuff well enough, I'd figure out how to grow a business. Turns out I'm much better at being that operator. The Gino Wickman idea from Traction is you have the integrator operator person, and then you have the visionary. I'm much more that integrator operator. And so if I'd have known about search funds, like I said, 10, 15 years ago, I probably would have gone down that route, right? So, I think that's just invaluable to hear what it is and that there are people doing it. It's not a brand new thing, that they can figure this out. So that's very cool what you guys are putting together.
Thank you. Yeah, no, it's something like it was kind of in like the top 10, 15 business schools, kind of like the only place. Like it started at Harvard Business School. But now it's like, it's more, when I first started Gentry, it wasn't like, I'd say ETA, things like the silver tsunami of people, business owners retiring, like people would have no idea what else. Now it's like in the world. So people are thinking about it, and it's right on time. Like I said, 7.8 million businesses are set to close. That's because 12 million baby boomer-led businesses are set to retire in the next 10 years. So it's right. It's right.
It's
so
crazy.
Many people out here listen and hear this and just learn about it.
Well, and this is why we've shifted our focus a lot at Angel Investors Network, right? Because we've been helping entrepreneurs from the ground up since 1997. Okay. And so that process, everybody wants to do that. They think it's the coolest thing until they start doing it. And then they realize, oh man, it's a lot of work. And not to mention raising capital, right? Less than 0.15% of every company that raises a single dollar ever raises venture funding, right? 0.1%. We're talking like a minuscule amount. But then you flip that on and say, it's like, okay, well, why don't they? Well, it's a big risk. There's no revenue. Or if there's any revenue, it's not profitable yet. There's negative burn. And we don't know how big the market is really, because you tell us how big it is, but do we really know? You roll the dice. And that's why angel investing I'm not gonna say it's gotten a bad rap, but most people won't do it because of that high risk. But if we take it and we look at this and say, oh, what kind of business are we buying? Well, something that's 20, like we're actually in the middle of an acquisition right now, going back and forth on a 20-year-old marketing agency that's spitting off $1.5 million EBITDA every single year, right? Like that's 20 years of history of all the learning, the lessons learned, and the hiring practices and everything else that's been built out. And guess what? They just want to move. And the beautiful thing is these people want to stick around and they want to scale the business up, but they don't know how to go to the next level. And so if I'm an investor and I'm looking at two different deals, and one is a brand new startup with a potential for a moonshot, that sounds really cool. But if I'm an investor, I have money for a reason, which is I was smart about my money. And I think a lot of entrepreneurs forget about this. The investor is smart about their money. That's why they have it in the first place. They learn how to save it. They learn how not to make dumb risks, dumb choices. And so they look at the moonshot like, it sounds really cool, but I'm not putting any more than 10% of even that into it in any startup, versus a company that, oh, hey, by the way, if you buy this one, it may not be worth $1 billion in a few years, but you're going to get monthly or quarterly distributions. Plus, we'll show you how to get a 20% IRR or something like that. That's just a much safer bet in their mind. And so this model is taken on a whole new meaning for a lot of people. It's picking up steam. we're addressing it, and we're actually helping entrepreneurs go this route as well. Like I said, the veterans specifically, but we're also showing our investors how they can get access to deals like this too. So I just think it's such an incredible model. I think we're just right on the same page with where the market's going. And yeah, of course, we always have a need for new innovation and startups, but there's this massive amount of businesses that are transitioning. And why shouldn't you just let them die when you can reinvigorate them with new life and new blood? And oh, by the way, make some money from day one.
For sure. Yeah, no. We're, like I said before, we're cut from the same cloth. And I think, the ties are actually helping us. Everybody is now, coming through COVID, value. That's what everybody was looking for. So I think that kind of swings it to this side as well. So yeah, no, I'm excited to hear more about what you guys are doing and how I can support or be a part of it. Because I think this is an issue that's big enough. Like you talk about VCs always looking for issues that are huge. The opportunity just in the United States alone is so huge. We're going to need some real solutions to kind of come together. I told you my why was to make sure no family goes through the same thing that I goes through. But another part of that why is, we talk about small business and, people are like, oh, well, Google was a small business or Google was a startup. No, small businesses under 500 employees represent $2.9 trillion in payroll every year. So it's like American small business dies, like the way that this big generational shift could take it. That's horrible for not just the businesses themselves, for the people. When a business goes away, that's tax revenue, jobs, supplier contracts, philanthropic giving out of a community that just evaporates. So yeah, this is bigger than you or I, bigger than our companies, but there needs to be some smart people working on these issues, and a lot of people are going to make a ton of money in the process too.
Absolutely, man. I'm looking forward to sharing your story more with all the people that are listening to this. And we've gone over a bit, but I think it's been a great podcast, a great episode. I really appreciate it, Jonathan. Sure. How can people find you, find out more about you and what it is you're up to?
So I think, I'm trying to think what's the best way. LinkedIn is probably the best. You can just find us Gentry Search Academy. That's the education component of what we do. Website is just www.gentry.io. And I'm a millennial, so Instagram, Gentry_MASE. Any which way, but just reach out because if you're interested in this and really want to make a change, either for yourself or for your community, I'd love to help support that. So please reach out.
Awesome. Jonathan, thanks so much for being here. And for all of you guys that are still watching and listening, as always, like, subscribe, and share. And you've been listening to Jonathan Mason with Gentry, and this is the Angels, Exits, and Acquisitions podcast. Thanks so much, and we'll see you next time.
Thank you.